good morning. You're watching The Market right here on ET Now with me, Asha Faridi, Nikunj Dalmia in the studios. And forget the budget cheer. We'll come to that in just a bit. But I think there's a bigger headline to focus on this morning. Just as everyone had thought, Trump's tariffs on Mexico and Canada to 25% and China at 10%. So that's exactly what he said. He's delivered on that, and that's shaking up global markets this morning. You've got the US futures tumbling down, the GIFT Nifty already indicating a 200-point downtick for us. So seems like some of that budget cheer could very well get undone.
Okay, so we'll talk budget, we'll talk markets, we'll talk sectors, but first let's understand the news. It's absolutely in line with what the US president had indicated, that he will come out and he will increase the tariff. So in terms of percentage, in terms of the countries where the tariff has been imposed, and in terms of market reaction, there's nothing surprising. What this would do to the world is that when tariffs they go higher, and especially when tariffs they go higher, it could have an impact on US inflation, and it could have an impact on global demand per se. So for countries and Mexico and Canada, China, the tariff is 10%, which is not very large, much lower than what was anticipated and expected, which clearly means that in the near term, it could have impact on trade, inflation, and everything else. But what it means for India is also important, right? Let's not lose sight of what it means for us. While we can talk about Mexico and Canada, there's nothing which has come on India. Yeah, that is what is important. Now, India, of course, US is, of course, a major ally of India. Export data will just come up on your screen. In percentage numbers, it's very large, both in terms of agri imports and merchandise exports. But the tariffs have not come on India. So this is the messaging which I think we should really focus on. Everybody knew tariff was coming, no surprise there. Second, the tariff impact is something which markets will not like, because it is something which near term could lead to a sentiment adjustment. Third, from an India standpoint, this is something which is encouraging, because nothing has come on India. See, Aisha, short term is about sentiment. So because of tariff, it's not that US will gain everything, right? I mean, they also will lose. It is not that dollar will only strengthen, because if rates they go higher, inflation will also get impacted. Today, I think it's a reaction. Some of that is warranted, some of that is not warranted. I would say that for us and for our viewers, we need to focus on what it means for the world, but what it means for India is far more critical than what these tariffs they mean for Mexico and they mean for Canada. I mean, it is their war they need to figure out. We have to look at what it means for us. Yeah. Like the Mexicans and Canadians worry about what is happening in India, let's focus on what we need to focus on.
Oh yeah, absolutely. But just the sharp knee-jerk reaction that you're seeing across asset classes. So yes, the dollar has jumped up about almost 1%. Euro has taken a deep dive. Bitcoin as well is following suit right now, and Swiss franc as well has lost that safe haven badge that it was sitting on, and yuan continues to be at a record low, and that's pretty much the case with some of the emerging market currencies as well, like the peso, which is also tumbled, so to speak, and Canadian dollar as well. The dollar, of course, has hit or rather the Canadian dollar has hit a multi-year lows as well. The euro has dropped to its lowest level since July 2022. Japan 10-year yields, that's nearing a 14-year high. And oil futures, they've seen a bit of a climb up on account of US tariff announcements. So it's currently holding around that $76 per barrel mark. But that said, for our markets, the setup has been completely different. Like you said, we have nothing, so to speak, to do with tariffs. Yes, immigration is a question mark, but let's see how that, sort of puzzle plays out. For us, the budget did what it had to and did bring about a cheer. But I think the question now in everyone's mind is consumption or capex.
So, Aisha, where do we stand in India? Just think about it logically, and I'll try and break it up. For us, we are going towards controlling our fiscal deficit. All other countries are expanding their debt. We are contracting our debt, number one. I mean, we are contracting a fiscal deficit. Number two, we've had a tax cut in India. Everywhere else, the consumer will have to pay more because of tariffs, and especially in US. In India, the consumer will have more money to spend. That is the second big difference in terms of what the positioning of the economy is. And third, if the government is giving you a tax cut, that clearly means that they pretty much are able to address what could be called as the near-term challenges in the economy. Then I come to the budget. Now it's hard to get bearish on India post these, hard to get bearish on India post the budget. And I'll tell you why. And I'm keeping the global setup aside for a minute, and I'm just ignoring the valuations for a minute. I'm looking at the big picture, which is what in the medium term and the long term matters. And the medium and the long term picture is that the Indian consumer is now feeling on top of the moon, and the Indian consumer will have more money to spend. That in a sense is something which automatically will have both short term and near term implications of where the economy is going to move and how the market rating is likely to move. Imagine you're going through a young economy, an honest taxpayer, and when they get more money in hand of when they get more money to spend, and we are looking at what about 1 crore Indians who are outside the tax bracket now, this will have both short term implications and medium term implications. And now is the last part, Aisha, which is that capex or consumption. And that is where I think the markets are likely to turn. We've discussed this on Saturday. I think more and more of that would be discussed. I mean, it is very clear that the government binge spending in capex is over, and it is very clear that the Indian consumer now, perhaps for it is very clear that now it is the Indian consumer which in a sense would be the focus for the government in terms of where they really need to focus in on. Aisha, 1 lakh crore comes in the economy, 1 lakh crore economy mein aata hai. And what will benefit? The first classic is that you buy FMCG, but I would say that this consumption cycle would be different. Imagine 7,000-8,000 rupees if comes in everyone's hand more. It's not that you will buy soap and shampoo. I think this would move into hotel, travel, hospitality, low ticket items. I think that is the pocket where I think this re-rating which started on Saturday, I think it's the real deal. If I look at budget independently, based on this budget assumptions, where we stand, where world is, it's hard to get bearish. What happens in the near term is dollar function, all those things will hit you because tariff war has come.